Fact. Pratik Gupta is with us, CEO and co-head at Kotak Institutional Equities. Pratik, good morning. Good to have you with us here. Thank you very much. It's a very nice, smooth and benign kind of an environment, and stocks are nicely moving up across the board. Doesn't matter what sector really. So just give us a sense on what kind of interactions you're having with foreigners, because bulk of the heavy lifting lately has been done by local investors, DIIs, not so much foreign investors. So where are they at as far as markets here go? I think we have a...
Hi, good morning, Prashant. I think
sorry,
Hi,
I think we... we can hear you. Go ahead, Pratik.
Okay, sorry, Prashant. I was just saying that you're right. It's being driven more by the by local investors, except I would say not even so much by the DIIs, but more by the retail and HNIs who are also putting in money into local funds as well. As far as foreign investors are concerned, they still like India from a medium-term perspective. In our interactions with global investors around the world, from a longer-term perspective, everybody is extremely positive. However, many of them believe the market is still somewhat expensive. So they're being very opportunistic, very stock specific, coming in as and when on any corrections or any stock specific moves, you're seeing corrections and so on. So we're not seeing too much of an inflow into global equity funds, partly because, China is not doing so well. So they in turn are not getting that much inflows into their global emerging market funds. But as far as India is concerned, everybody is positive, except they're just sort of holding back for the time being, either waiting for a market correction or waiting for some events to get more clarity on the earnings outlook, which is still somewhat muted. Just to give you some numbers, for example, in the upcoming March quarter results, we at Kotak, we believe Nifty earnings will grow by barely 4% YOY. If you roll forward into FY25 and FY26, our analyst team expects the Nifty earnings to grow by barely 11-12% for each of the next 2 years. And for those that kind of growth, we are paying roughly 21 times 1 year forward multiple on a PE basis. So that's sort of what's holding back greater foreign investment, which is why in the month of March, we've actually seen foreigners being net sellers to the tune of 4,500 crores. Having said that, like I said, there is tremendous amount of interest. People are sort of doing their homework, they're meeting companies. We at Kotak are very busy, our analyst team, in terms of doing teach-ins for all these global investors, getting them up the curve. So, which is why we maintain our view that despite the expensive valuations, we don't think there will be a very big correction. We think the market will trade sideways in the short term, but longer term, the prospects still look quite good.
So Pratik, foreigners like India, but they're uncomfortable with the current valuations to chase the Indian equity markets. But if a correction is not coming, when will they enter? When do they start getting back into the Indian markets? Because India is only getting, moving up and up.
Yeah, so I think there will be 2-3 triggers to watch out for. One is a change in the global interest rate environment as and when the US Fed starts cutting, is likely in the second half of this calendar year. That is one potential trigger, which typically means a weaker dollar and money flows into emerging markets. So that time you will see, EMs like India in particular get a disproportionate share. Remember, India's share in the MSCI Emerging Markets Index has gone up from roughly 8% 4 years back to now about 18%. So India is a market which is now too large to ignore for most global investors. So that one is the US interest rate cut cycle. Second, I think, is also in our conversations, there are some global investors who are still holding back for the political certainty, political outcome to be very clear, and getting some sense for the sort of reforms which will be driven by the new government. So once you have the June election results out of the way and the cabinet formation and perhaps the budget, so in the June-July period, as more clarity emerges, I think you will see a lot more money coming into India at that time as well. So these are the two main triggers. And obviously, if there's some geopolitical shock or maybe you have a bad monsoon forecast, those kind of downside risk events, and which causes a market correction, that could lead to fresh foreign inflows. Otherwise, I think, most of these folks are just going around picking stocks and, at the margin, just incrementally increasing their allocation, but not really in a big way.
Hi, Prateek. Good morning and good to see you. When I recall, we had a chat last time around upon some of these insurance companies, banks, both private and public sector banks. And I think you mentioned you like 2 or 3 public sector banks, but you also like the private banks. At current reckoning, how is it split? HDFC Bank, after a while, it showed some kind of good numbers. The street appreciated the deposit growth. But some of these PSU banks as well, valuation-wise, it's still not very stretched. Your take?
Agree. Completely agree. We think some of the top 3-4 high-quality PSU banks still look very attractive. We are in a benign credit cycle from an NPL cycle perspective. We think NPLs will remain under control. Loan growth is still picking up. Most of these PSU banks have very strong liability or deposit franchises. The ROEs are inching up. And as you rightly said, valuations are still quite attractive. So we like some of the top PSU banks. At the same time, the private banks have underperformed quite a bit in the last 1 year or so. So from a valuation perspective, they've also become quite attractive. Although in the near term, I must caution that the March quarter, June quarter, the earnings for the banking sector may not be that great because of the ongoing NIM pressure because of higher cost of deposits. And loan growth is just about average. So no real positive surprises likely. So in the short term, these stocks may not do very well. But if you have a 2-3 year investment outlook, then we still think the banks look really good from a longer term perspective.
Prateek, on real estate, again, we had R. Srinivasan, CIO of SBI Mutual Fund here yesterday, and he was saying, I'm very bullish on real estate, but it's kind of hard to find ideas what to bet on because everything is done so well. It's a predicament, I think, one finds oneself in many sectors. But here, what if one had to buy one stock from here in the real estate space? What's the top idea at Kotak?
So, Prashant, firstly, on the real estate space, we've also been extremely positive. And but as Vasan said, I guess most of the story is already played out. So to expect further upside in the very short term is, I think, a bit being overly optimistic. That is unlikely. But if you have a 2-3 year investment horizon, we think some of the real estate stocks, take the top 2-3, real estate stocks or some of the Bangalore property companies or the likes of a DLF, etc. We still like them. Except, I would say that you need to have a 2-3 year investment horizon given where valuations are. We think the cycle is still in a very strong shape. You are likely to see somewhat weaker interest rates going down later this year. Affordability has become a lot better. And as the consumer recovery continues, especially on the premium end, we think the demand will remain quite strong. The supply side is taking some time to catch up. So developers who have the land banks, who have good project execution capability, good governance, valuations, I agree, which is why short term, I would be careful of chasing. But from a 3 to 4 year view, we would still like the real estate company.
What about auto? Autos have also been in an upcycle for the last 18 months or so. Numbers are looking up. Would you expect this cycle to continue?
I'm sorry, the connection dropped in between. Are you asking about the auto
I was asking you about autos. Do you think the upcycle in autos will continue?
So I think autos, you have to break it up into 3-4 different segments. One is the two-wheelers, then you've got the commercial vehicles, the passenger vehicles, and the auto ancillaries. First and foremost, I would say any company which is more export-oriented, you have to be a bit careful. The global economy is still slow. Exports are still weak, and therefore we would stay away from companies which are more global in nature and focus more on the domestic place. Over there again, I would still focus more on the commercial vehicle side than on the passenger vehicle or the two-wheeler side. In the two-wheeler side, there's still a very, very big risk of disruption from EVs, which will hit the two-wheeler segment the most. While there has been a modest recovery, a good recovery in the last few months' numbers, but to extrapolate that for the next 3-4 years is a bit being overly optimistic. On the passenger vehicle side, we find valuations being a bit stretched. which is why the commercial vehicle segment is where we think, stocks, we like stocks like Tata Motors, for example, where we think, they're doing both on the PV side and the CV side, they're doing quite well. The auto ancillaries is another way to play the sector, but most of the auto ancillary companies, unfortunately, are export oriented, and they're in the short term, we have a somewhat of a cautious view, but these are good businesses. And if you see, the stocks coming off by 5-10%, that's where we would probably start getting interested again. But at current valuations, in general, we would be somewhat cautious on the auto sector.
Good speaking to you, Prateek, as always. Thanks a lot for joining in and filling us in with your views. Wishing you a good day ahead.